Okay. Hi, I'm Peter Rose, founder of Longwood Currency Trading. Will you be successful trading Forex? Well, first of all, what is success at trading Forex? Well, since the statistics are that 90% of people that get involved in Forex trading lose 90% of their money in 90 days, those are pretty daunting odds. So I would think that just the base definition of success would be play the game, but don't go broke. In other words, your jump ball, you don't win anything, but you don't lose anything. That would be successful in trading Forex. So the question really isn't, will you be a success? Because it's more of a matter of how successful you want to be. That's the real question. It's easy to be successful at Forex because you're going into the thing in a random environment that over the long run, there are packets of trending price action. There's predictable range-bound trading where you're hitting resistance in supply zones and bouncing around back and forth, where you get some probabilistic advantage to you. So as a jump ball 50-50 trader, you're basically 50-50 odds with the market. So it's like flipping a penny. You know, over the long run, you're going to get 50 heads and 50 tails. So over the long run in trading Forex, you'll get 50 wins and 50 losses. If you bet the same amount and you take the same number of pips for wins and losses, you'll break even. So that's how you that's how you beat the game. But not only learning the fact that as a 50-50 trader, you could be break even and successful. That next step up is, well, if you could just reduce the number of pips in your loss a little bit, you'd be positive at the end. Or if you could gain another pip or two every time you win, then you'd be successful there. You'd make more money there. And if you could get more pips on the win and less pips on the loss, then those things would combine together in order to make you more successful. But is that successful enough? Well, let's be realistic. The younger folks that I talk to that are getting involved in Forex trading are looking at all the talking heads like myself out in video land. But I try to talk realistically. That's why my subscription rate isn't up very high and my view count is low, because I'm not offering any magic secret sauce. I'm not going to blow smoke up your ass that you're going to take a $1,000 account and make $30,000. I have a degree in physics, almost a minor in math, did 40 years in real estate and walked away a millionaire. I think I understand life perhaps better than most. And I'm at 75 years of age. This is 2024, December 2024. So I've got some dirt under my toes. So when you look at let's say just the average person that's getting into Forex, why are you getting into Forex? Because you think it's an easy way to take $1,000 and run it to 10,000. If you were to get in your car and drive to the store, that would be a successful trip. Now, why did you drive to the store? Well, you drove to the store to get groceries. Did you drive to the store to buy $10,000 worth of groceries? No, you went down to get maybe $100 worth of stuff to last you for a few days or a week or whatever. You're low on milk and dog food and whatever, so you go down and get that. So that's a successful trip. Oh, I saw a nice bottle of wine the last time I was in the store. I thought, hey, I'll buy that. Well, that was a little more successful because that bottle of wine went really nice with the, I did sort of a shrimp Creole dish, and the wine was a Shiraz. It went nice with it. So I had a more successful trip than I would normally do, just going down buying some milk and dog food. Well, we're talking about life, Peter. What does that have to do with Forex? Well, Forex is life. It's your attitude about your expectation that enables you to get through life successfully. If you're going to run in a race, you don't expect to run the mile in 32 seconds. It would be nice. You'd win a lot of trophies, but is that reasonable? Just to come even with a good high school runner is going to take you some work if you're older. It took the high school kids time to get to the point where they could run their mile in whatever time they're running their mile. So anything that's worth striving for is going to require some education and some hard work and time. Those are the three secret sauce things that you need to have in your little bucket before you go splattering your face around saying you're going to be a successful Forex trader. Okay, so will you be successful? Yes, if you follow some really basic rules, you'll be successful. So the question is, how successful do you want to be? And the next question is that you're going to ask is, how successful on a reasonable standpoint should I expect to be? If you're investing, let's say, in a no-load mutual fund, an ETF, an index fund, 8%. Throw your money in there, you get 8%. If you do long-term stock investing and you're not too stupid and buy stupid shit, you go on the advice of a broker and diversify your portfolio, then over the long run, you may get 9 to 12%. It's difficult to tell in the stock market because there's so many variables that are involved. But 9 to 12%, a little bit more than the index fund, because you're taking more risk. If you want to take a little bit more risk, what's your expectation in real estate? Well, if you just buy your home and you're in the heartland, you're probably looking maybe a 5% appreciation over the long run per year. If you're on the coasts, that number is probably 8%. They're a little bit more vibrant real estate market on the coast, and so you could probably expect 8%. If you're an investor, I mean, buying your own home and getting 8% a year is not trading, it's not an investment. It may turn out to be profitable for you, but you don't look at your home as an investment. You never should, because you can't sell it in order to pay your bills or buy food or stuff, because you wouldn't have anywhere to live. And if you sold it, then the houses that are in the immediate area would cost you as much to buy as you just sold yours, because that's the market value. And so you're losing money on selling your house, because you got to pay real estate commission fees and taxes and all the rest of the crap that goes with it. But if you're a real estate investor and you're in the game for that, if you're in a flipper mentality, you could take your money and run that probably twice a year. So if you're putting $300,000 into a property, or $1.5 million into a property, and in 6 months you're going to renovate the thing, you're going to turn that money and make what percent return? Well, you buy a $300,000 house, you fix it up, you sell it for $4, you make a third. Okay, so maybe you make a third on a flip. If you buy an investment real estate, apartment, a house, or something like that, you're still, the property is appreciating. The property itself is appreciating at 8%, but you have net cash flow from the rental tenants. So you're adding the net cash flow onto your down payment that you paid, and you're calculating a return, a yearly return against your risk, and that includes that cash flow. And now you're looking at 20 or maybe 25% compounded over on a yearly type basis. Of course, those investment properties tend to go down 30 or 40% sometimes in market crashes. Believe me, I was in real estate 40 years. I understand the numbers. I understand what happened. I lost $1 million twice in my life because of economic collapse in the real estate market. I was able to make the $1 million back each time, but it took me 10 years each time. So there's a time factor in the compounding that is involved in real estate. But the returns are pretty good. Let's call it 20%, which is a little riskier than the stock market, obviously. Now let's look at currency trading. That's riskier than real estate. So you would expect that if it's going to be worth your while to get involved in that complex of a market, that your return would at least be better than what you could get in real estate. And in fact, because you are in complete control of going in and coming out and all that other sort of stuff, it would seem to me that you should be looking at about a 33% return on your money to make it worth your while to get involved in real estate. Does that mean you can make 33%? Does that mean that you're going to come out of the gate and you're going to have some great skills and you're going to be able to make 33%? If you came right out of a building program, carpentry program, would you be able to go out and build a $2 million mansion? You wouldn't. It takes experience and time. Would you be able to get there? Well, you would if you followed the rules of good construction and you learned the laws and all the rest of the stuff that came with it. So in time, I would think that if you didn't feel that you were going to be able to make a 33% return against the capital that you're putting at risk, that you probably shouldn't consider getting involved in currency trading. So will you be successful trading currencies to the 33% return against risk level? Yes, if you can follow the rules. Now, if you're making up rules by pulling shit out of your ass and throwing them against the wall, or listen to what some fool did, he runs through a minefield and he gets to the other side and he thinks he knows how to run through a minefield and he's telling you how you should run through the minefield. That's what all the educational stuff that's out there, most of it, is doing. You get some lucky fool that levered up to 500 to 1, lost 10 or 20 or $30,000 4 or 5 or 6 times because that's what you do. And then he got lucky and he took the $20,000 account and he got it to 6 figures. And then he took the 6 figures and he made $1 million or whatever. And he's going to teach you how to do it. Except number one, he doesn't know what he did and to be able to teach you. And number two, he's not an educator. He just got lucky and he's got $1 million in his bank account and he's not going to be able to teach you how to do it. So what good does it do? He's got a Lambo and you don't. You want the Lambo and you think that currency trading, because you listen to him, that's your secret sauce to riches. Well, that's way out and above the 33% that you're trying to get to. And that's why you're going to fail, because you're not being reasonable in what your expectation is and you're not willing to put the time in. Is it possible to double your money in a year? Yes. I mean, I've had years where I've been up going into the fourth quarter, up 80% on my bank. I'm usually very high as I go into in my positions as I go into the fourth quarter. But then you get all the other economic conditions sloshing around that screw that currency market up, because the currency market is based on the economies of the two countries, and those economies have more to do with the stock markets and the pricing index and all that other stuff. And everybody's trying to recalibrate end of year and get ready for the next year. And so your rules have to be really good in order to get through all that. And because of that volatility, that's a great time to shove all your chips to the center of the table, because you can make enormous returns. I've made coming up to fourth quarter, I've made 3% sometimes a day on returns. So, I mean, if you can make 10% a month, you get 100% return on your money a year. So I'm doing 8, 10, 12, 15% a month on some months and 4% on some other months. I'm up around 80%. And I go into that fourth quarter and I go to swing for the fence, which I shouldn't do. I should know better. But I love to trade. I love to get in there and wing it. And it cost me that 80%. It cost me the whole thing. I think a couple of years ago, I was up 80%, and I ended up, I think it was 48% or something like that. So I did really good, but I took tremendous hits because I swung for the fence at the wrong time. If you take that component out, and I didn't swing for the fence those last couple of times, if the bear wouldn't have stopped in the woods, the hunter to take a shit, the hunter would have never seen him to shoot him. So if I wouldn't have taken those bad trades, or if I didn't know they were bad when I took them, or I wouldn't have taken them, or I would have got out and just lost $10,000 or $20,000. I'd have been fine. No, instead it goes ahead and I could lose $1,000 on a trade or whatever. If I wouldn't have done that, if I would have just followed my rules and got out, I'd have lived do another day. What would my yearly return have been? It'd probably been, I would conservatively say 120, 140% against my risk. Well, what got me to the point where I'm able to do that, and why am I not able to do 140%? It's because that's unrealistic. So if it's realistic to get 33% and it's unrealistic to get 100%, then somewhere in the middle, you should be able to get to relatively easily with simple rules. But you got to follow those rules. How do you know that the rules are good or bad? What is your basis of understanding? You're going to watch somebody on video land talk to you about Fibonacci fucking numbers? Really? What do you know about Fibonacci numbers? What do you know about engulfing candle patterns? Why did the person pick this engulfing candle pattern instead of the three patterns that came before? Look at the fucking charts when these people are talking to you and see that they are not basing their trading decisions on an engulfing candle pattern or a Fibonacci level or a Bollinger Band. They're basing their trades on their experience because they lost an awful lot of money to get that experience so that they don't make the mistakes and they see stuff that you don't see. But the only way they have of describing it to you is to talk about Bollinger Bands and Fib levels and all this other crap. And so by you focusing on what they're telling you, it's bad juju, it's bad education. And you're trying to make that stuff work. Is there any reason why you don't understand that 90% of the traders are going to lose 90% of their money in 90 days because of the education? You have to get out of that. You have to take responsibility to step back from the trading platform, look at the price action and say, over the last 6 months, I've noticed A, B, C, and D. Make a fucking rule up that makes those A, B, C, D things practical and see what happens. Or if you can find somebody out there in video land that you can trust that will give you the straight scoop on what you can expect to do and what the steps are that you need to go through in order to do that, you can be successful sooner than if you just go out and try to reinvent the wheel. If you want to learn how to drive a car without any help at all from anybody, you could probably do that. You might wreck the car. You might scrape it. You might hit the accelerator when you want to hit the brake. But you could learn how to drive the car yourself. But why bother to take those chances? Why bother the risk of ruin? You go take a driving class. I mean, we've all been at least to high school. You can see the educational process. You took history. Everybody takes a history class. Why couldn't you just read the fucking book and take the test and learn the history that way? What do you need a teacher for? What do you need the history teacher for in high school when they have a book? And you should be able to read that book and pass the test that the teacher would write against that material. He's not going to change the history. Or the history that he's teaching is in the fucking book. Why can't you just read the book? What do you need that teacher for? Well, go to Google and Google educational process. Why do you need a teacher? And find out for yourself. You should know that for yourself. You need somebody who's lost money and been through the things, but who understands why they lost, how they got better, and not only that, but they also are a communicator and can teach somebody how to do something. In the big picture of things, will you be successful at trading Forex? Yes. That success as a flat line is you won't lose any money, but you won't make any money. That's success. And in fact, in the beginning stages of your training, when I work with a student anyway, if we can just flatline the curve, the equity curve on that at 0, we're good. And then it's a simple process of taking the person through, just like learning algebra in high school. You learn this little simple stuff, and they get to do that. Oh, this is really easy. Oh, well, we've got a commutative operator. We got a, it's transitory, it's whatever. Now let's look at the next level of equation and do that, and use this stuff in order to solve this more difficult problem. We do the same thing in the currency trading. Let's work on this and see if we can get just one more pip on the average winning value side of the win-to-loss ratio equation, and see what we can do. What does that one pip do to change your score? What does an extra pip loss do to that? And you see what happens, and you go, well, I don't want that to happen. Pips become important. Pips are what you need to concentrate on, and not the dollar value. The dollars come as a result of the pips. Okay? You don't make dollars by looking to make dollars. You make pips, which creates dollars against the size of the bank that you're trading with. If you can make 10 pips on one full lot at $10 a pip, you make $100. If you trade a 10 lot at $100 a pip, you make $1,000. It's the same pip value, but the dollar value goes up crazy. That's how you make money. But you don't seem to get that from the educators that are out there. What do you get when you trade? You get a Lambo. Oh my God. How fucking stupid are these people? So all I can do is tell you, yes, you can be a success trading Forex. It's very easy to get to that flat line and the break even, but you do need somebody to work with you and help you do that. Could you take that training and then move that forward into a 33% gain or an 80% gain yearly against your bank? You might, just like driving the car. Once somebody shows you the accelerator pedal and the brake pedal and how to steer, could you navigate the expressway? Yeah, you probably could. You also have still a very high risk of ruin. And so take advantage of the skills that a mentor or a good educator can bring to you in learning what these little baby steps are, because each baby step is compounding. I don't teach my students compounding money or lot size until they get to a more advanced level. I think compounding your account, that's for people who want to take a $500 account to $1,000, but you're not going to take $100,000 to $200,000 using the same strategies that you would take doing a small account building. But you learn your basic flatline stuff, you build it a little bit on that, and you grow it a little bit, and then you add to it. So you're compounding your knowledge, not your dollars, not your pips. You wait for that. And as you continue to grow, all of a sudden your knowledge goes like that. And as that knowledge grows, your risk management comes more into focus. And with that risk management, that's the thing that enables you to make a lot of money, not Bollinger Bands or fibs or London Opens or whatever you're doing. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.